Hey everyone, Shauna the Tax Goddess, and I am here today with the very wonderful, very smart, and rather knowledgeable and handsome and nice to boot on top, Mr. John Casmon. So John, thank you so much for being here with us today.
Shauna, thank you for having me, and I appreciate all those kind words you said about me. I love it.
Well, when they're true, I mean, it's just a statement of fact. So what do you do? So we are here today to talk about some of the key identifying areas for real estate investments. Now, this is one of John's specialties, and Tax Goddess is about 40% of our practice is real estate. So this should be a really fun discussion today. I'm very excited to have John here. Now, John, give us the big picture overview. What does Casmon Capital do?
Yeah, so listen, your listeners know real estate is one of the best vehicles around when it comes to saving on your taxes. So lots of investors want to get into real estate. What we do is we actually partner with everyday professionals to invest in real estate so that we take on all the responsibilities of managing it, right? The downside of owning real estate is being a landlord. It's managing the construction, it's managing the flips, right? Most of us don't want those 2 a.m. phone calls about a toilet leaking and have to get up and try to figure this thing out. So what we do is we provide passive investment opportunities. So in short, we go out, we focus on multifamily apartments. We will find the deals, we'll evaluate them, we get them under contract. We then bring those to investors in our network and they can join us on those deals. We are still in charge of managing the property management companies, overseeing the assets. We take care of all of those things. Investors get to partake in the upside of the equity that we're going to create. So it's a great way to invest in real estate without having the headaches of being a landlord yourself.
And I was going to say that 2 a.m. telephone call. I was a landlord many, many, many years ago, and I've had a few of those, and they are not pleasant.
Never fun, and they're always inconvenient, right? I used to get them every time I was going on a trip. My wife and I would take a little weekend vacation. That Saturday, hey John, sorry to bug you. I'm like,
we got to try. We got to try. So
yeah.
this is awesome. So people can come in, get the equity side of it. Now, I did hear passive from that standpoint. So from a tax perspective, if somebody's got passive income or passive losses, offsetting it with passive income or passive losses from real estate would be a good match. Is that right?
Yeah, spot on. Listen, you know your taxes. So that's one of the greatest benefits is it's an investment where you get really the 5 key, things we love about investments, right? People call it the ideal investment because you have this opportunity where you're going to get cash flow, you get depreciation, you get the equity, you get the appreciation, and then you get the leverage itself, which is getting the loan from a lender. You don't have to bring 100% of the capital to buy a deal. So we go out and buy a $10 million property. We don't have to bring $10 million to do it. We're getting a loan from the bank for maybe 70% of that. We're going to bring 3 million plus whatever we have in our business plan to try to drive up the equity and drive up the value. And as an investor, you get those pass-through tax benefits. So unlike if you were to invest in, say, a REIT, where all of those tax benefits they're kind of already taken, it's already included. With this, you do get the pass-through benefits. So you are an owner of this property with the LLC. So when we take our bonus depreciation losses, that's passed through directly to our investors. So it is great for anyone who does have other passive income, business owners, qualified real estate professionals. They get to take full advantage of some of these deals.
I love it. Now, you hit on an example deal here, right? And for anybody that wants to see some samples, you can go to John's website. We've got it scrolling on the bottom. We've got a sample deal there. But, you hit on an example here of, okay, $10 million property. What are kind of the ranges of properties that you're normally looking at?
Yeah, it's a great question. So the way it works in general, right? If you think about investing, you could go out and buy a house as a rental and manage that or run that yourself. But at a certain point, as you scale up, you may run out of your own money. So what we do in that case is we focus on a little bit of larger assets, typically 50 units and up. We really like that 100 to 200 unit range. That's kind of where we focus. The assets themselves typically are going to be somewhere in that $5 to $20 million range is kind of where we play. And we are always trying to look at opportunities where we can create value. So for us, it's usually building out our network, connecting with like-minded individuals who love real estate, but don't want to be a landlord themselves. And the range on the deal kind of varies based on the opportunity.
Love it. Love it. So lots of options, lots of opportunities. And so this is really a good way for somebody who's just kind of interested in understanding what's even available to come look. How should corporate professionals really invest in multifamily?
Yeah, I mean, listen, I think like any other business, if it's not your area of expertise, you probably want to lean on someone who spends more of their time focused on that. And I think the mistake people make is you want to get the benefits of real estate investing. Again, I talked about the appreciation, I talked about the cash flow, the equity upside. We talk about the tax benefits. So most people go out there and they buy a property, they buy a house, they buy a small duplex, they're the landlord. They don't have the time to do everything, but usually on a house or duplex, it's not a full-time job. So you can kind of get away with it and it's okay until you get that 2 a.m. phone call or until that tenant leaves. And now you've got to go through the process of turning that unit, getting all the contractors out there, the painters and everything else, right? And now it becomes a part-time job. And most of us aren't prepared for that flip of the switch to go from, oh, this is passive to, oh crap, this is a lot of work. So for those individuals, if you are a corporate employee, if you've got a great career, if you are really just trying to put your money to work, investing passively is a great strategy and something you should certainly consider. If you really want to have more control, by all means, you can certainly buy a rental. But most of us want the benefits, not the job that comes with it. So investing passively is certainly a great option. And I implore everyone to learn a little bit more about that process.
Love it. Now, great corporate individual doing a good thing. How much money, is there a minimum? Is there a maximum? How much money can somebody invest if they were to get into something like this?
Yeah, every deal is different. I know some people do deals where the minimum is like $25,000. Typically, our deals start at $50,000. And one of the reasons for that is this is more of a longer term investment because you're partners, right? So you get the same tax benefits, but you're also an equity partner. So we typically hold these deals anywhere between 3 and 7 years. I usually tell people expect to be in a deal for 5 to 7 years with us. And because of that, it takes a little bit longer to create that value. The good news is, we mitigate some of that risk because we are going to be in these deals a little bit longer. We're not trying to time the market. We're not trying to get in and get out and, maybe interest rates or something else, starts to throw off our business plan. We really try to go into a deal with a clear business plan, a clear path of creating value. So because of that, it does require a little bit more of an investment. But we also say, hey, when you are looking at investing, make sure you understand what your goals are. So again, if you're looking at long-term wealth appreciation, if you're really trying to grow and scale, this is more of a get rich kind of slow mentality.
I was going to say,
It's not rich, right? It's not fast. It's not super quick. But it's not that slow, but it does take time. So again, this is not cryptocurrency. This is not penny stocks. This is not just hoping one of these techs hit. This is income producing assets. So we're investing in these properties that exist. They're physical. They have leases. They have contracts on them. They are producing income. So we like the fact that there's that stability of this income producing asset that's tangible as opposed to an idea that can be, maybe impacted by technology or artificial intelligence. People will always need a place to live. So we like that component of it.
I like that component too. Roofs are good. Roofs are good things. So, one of the things that you mentioned here is the ability to look at that from a long-term perspective, right? That 3, 5, 7, 5 to 7 is probably closer. To me, generally, that speaks to the desire to build value because, sure, maybe you can buy a good deal on day one. You happen to get a screaming deal, and then you can flip it in a year. But that is a much harder thing to do, as you said, to time the market. So what other kind of, if I wasn't sure and I was nervous, what other kinds of things, as I'm looking at the Casmon Capital side or any investment in real estate, what are kind of the key areas? What should I be asking that I don't know to ask because I'm a corporate employee?
Yeah, it's a great question. So first of all, I think you want to focus on what your goals are as an investor. I think too often people just jump in and start doing something because they read about it in a book or they heard somebody in a podcast and heard me, right, say something. They're like, oh, I should syndicate. No, that's not what you should do. Figure out what your investing goals are. How much longer do you plan on working? How much capital do you have saved now? Do you have children you need to send off to college? You've got to figure out your own financial goals and strategy. From there, you have to understand that every investment strategy has some level of risk, but you want to mitigate that risk as much as possible based on your risk tolerance and based on the runway you have to invest. If you're older, closer to retirement, you probably don't want to be investing in AI and startup technologies because you won't have the time to recover if some of those deals don't pan out. So understand your risk tolerance. And once you understand that with real estate, you have deals that have a higher range of producing wealth and driving appreciation. Think new development, new construction, right? Nothing exists today. You're going to invest and build this thing. It's going to be worth more money when you're done. And then some deals won't go up in value as much, but maybe they deliver great cash flow. So think about, maybe some affordable housing properties that have maybe really good cash flow, but they're not in desirable locations where they're going to go up in value over time. So you really have to figure out what your investing strategy is. We focus on a blend. We like properties where they will go up in value over time. They do provide good cash flow, and we have a lever to create more cash flow and more value. So we call it value add investing. But in short, think about buying an existing business that is already making money. You can see the P&L, you can see the last 2-3 years of operations, and you know how much money it's made. So you can buy it based off of that operation. But you're going to come in with the business plan and say, okay, we're going to put our systems in place here. We're going to bring in our team. Here's how we're going to create value. Here's how we're going to grow the net operating income. And based on that, we're going to make this property worth more. Again, we're not rushing this. This is not something we're going to do in 30 or 60 days. This is something we're going to do over a 3 or 5 year time frame. And then at the end of that time frame, the property is going to be worth more money. So those are the kind of things we're looking at to make sure we have a sound business plan. And I think if you are looking for that blend of cash flow, appreciation, tax benefits, investing in deals like we offer would be a great opportunity for you.
Now, I almost feel like I'm about to ask about a trade secret because you said we have a special lever. So what's the lever? Can you share what details?
Yeah, absolutely. It's not really a trade secret. It's for me, the key is you want to force appreciation. So the difference here in strategy is this, right? So some people want to invest in what they would consider maybe an easy investment. So I want to buy something already renovated. Maybe it's a turnkey property. And maybe some of your listeners know what this is, right? You may buy a property, maybe in Ohio or Memphis, Tennessee, or something like that, and it's already been renovated. They already put a tenant in place. All you got to do is buy the property and get, mailbox money. And that's one strategy, certainly. However, most of the value has already been taken out. So what we want to do is we want to buy something that is currently making money. So I don't want to buy properties that are dilapidated or run down or businesses that have major issues, because that's a lot of risk. I got to turn it around. I'm probably coming in and losing money out of the gate, and I don't want to do that. So we're going to buy something where it's already making money, but we're going to create that value. So that lever is our business plan to create value. That could be through renovating units so we can increase rents. It could be by putting in professional property management that has the proper systems to follow up and understand where rents should be. It could be by decreasing operations. It also could be understanding what's happening in a submarket, what developments are coming in, what new companies are going to be there. Are we investing in areas where rents are growing? So we're taking a look at all of those different things to figure out where we can control and add value. And that is how we deliver returns for our investors.
I love it. And, you hit my next question nail on the head, right? How do you know where the best area to invest is? How do you figure that out?
Yeah. So listen, that was one of the biggest challenges I faced as a new investor. I used to live in Chicago, and when I was starting out, I had a 2-unit building and I did really well on that property. But to be fair, I mean, you couldn't find an easier market to invest in. And what I mean by that is I did my research, and this is back in like 2012. And there was a magazine called Chicago Magazine, and they listed the 77 Chicago neighborhoods, and it had, which ones went up in value for home prices, which ones went up in value, the percentage, all that stuff. Well, guess what? Out of the 77 neighborhoods, keep in mind, this is 2010 to 2011 is where they were tracking the data, right? So coming out of the Great Recession, the economic downturn there, only one didn't lose any value from 2009 to 2010 to 2011. I was like, well, listen, I don't know anything about this submarket, but if that one didn't lose value over this time frame and 76 did, that was my criteria. I'm like, we just buying in this submarket. And we did. I bought a 2-unit there. It went up in value. I did really, really well. I made 6 figures on a $300,000 deal. So that was great. However, how do I replicate that? Right? The neon signs were not going to reappear. So I had to really learn, okay, well, what worked here? How can I deconstruct this and replicate this moving forward? So in short, there are a few things that I've learned in how to find the right market. First of all, you want to look at the macro market. You want to look at population. You want to look at job growth. You want to look at the ease of doing business. Is this a business friendly environment? Are they recruiting top employers, or is it difficult for businesses to operate and are top companies leaving? So we want to take a look at some of those key metrics. Then I want to look at the sub market. Okay. Where is the puck going? I'm looking at infrastructure development. I'm looking at grants and maybe opportunity zones. But like, where is the city saying, hey, this is a part of the city we really want to see get developed? Are they putting in? So in Chicago, you have the train line. So I would look to see, well, where are new train stops being added? What companies are coming? What parks are being built? That's going to give you a really good indication of where they expect people to move and flow moving forward. So that's something we pay a lot of attention to identify both from a macro standpoint, where people are looking to live, but also on the micro standpoint within those submarkets, how to find the best places to invest.
Oh my goodness. Yeah, just a little overwhelmed because that sounds like tax code for real estate. It's what it sounds like. You have to know all these things and be able to pull them all together. And this is why we work with experts, right? Because I mean, I don't know how to do it. And you're right. I've done the 2 a.m. calls. Don't want to do it. Much easier to work with somebody and with a team that knows what they're doing. So how does Casmon Capital, how do you attract investors? How do you raise capital? Like, what does that look like from the other end?
Yeah. So, for us, it really just comes down to educating people. Our investors typically, they're looking for a solution. They realize real estate can help them reach their financial goals, but they're trying to figure out the best path for themselves. So if that's something people are interested in, typically they reach out, have a discovery call with us, just learn a little bit more about our process, who we are, what we do. We get to do the same thing with them. And if it's a fit, we get them added to our investor list. And once they're on our list, they can then see some of the future deals that we have. And we do a great job of making sure we educate people about the deals. We will do a webinar to talk about the deals. You'll get to hear from other investors, hear their questions about what they have. And I think that's really helpful as a newer investor, because sometimes you don't know the questions to ask and you just don't know what you don't know. So to hear other people ask those very poignant questions can be really helpful for newer investors. So once we kind of go through that process, at that point, they can go ahead and make a commitment to join us on the investment. But the very first step is actually just getting on our email list, right? Once you're on the email list, we can set up a call. You can go to casmoncapital.com, and there you'll see a button for investors or new investors or contact us. Just go ahead and click one of those buttons, and then we can set up a call from there.
Awesome. John, you're a wealth of knowledge, as always. This is no big surprise on my end, and I think I love the idea that, anybody can get into real estate. You don't need to be overwhelmed by the 2 a.m. telephone calls, or how do I understand where they're building the new city park along a bus line? Like, I would have no clue. So really being able to work with you and your team is fantastic from that standpoint. So my final question, it's a little bit off topic, but I just have to ask, John, you have such a strong brand in this industry, such a strong personal name out there. How did you do that? How did you develop this brand?
Yeah, so it's interesting, right? So my background's in marketing. So prior to going into real estate full time, I was in marketing and advertising. So I understood branding at a corporate level, a product level, a service level, even like an influencer level, but not really for me, like third party influence, not like me as an influencer. So I think what happens sometimes is we almost overinflate what a personal brand is. We all have a personal brand. Okay. A personal brand is just how others see you. We know you as Shauna, the tax goddess. And what that means is when I think of taxes, I'm thinking Shauna. As a matter of fact, we didn't plan this, but I actually sent your information to someone last night. I sent the episode we recorded to somebody yesterday who told me, one of my investors, he told me, hey, I'm looking to replace my CPA. And I'm like, hey, well, I had this great conversation with Shauna. She's not really a CPA, but she's a tax strategist. She can maybe help you out though, right? And then I got into him explaining the difference between a tax preparer and a tax strategist. So
thanks,
point though, but that's the personal brand.
Yeah.
The moment I got this question about taxes, I immediately went to Shauna. And it's not, yes, some of it is the name and the branding and all of that, but ultimately a personal brand is just how others perceive you when you're not in the room. And hopefully when I'm educating people on multifamily investing and trying to share information, I become a trusted advisor, and they know, hey, John's going to be able to help guide me along this real estate journey. And just being able to show up like that is the best way to build a personal brand. So we've done our podcast Multifamily Insights for about 7 years now. We've gone 2 episodes a week for like the last 4.5 years. We've gone every Tuesday since its inception. So just showing up, being consistent, that is how you build a personal brand. Because at the end of the day, I've talked to other tax professionals for sure, but I want to make sure if we're going to talk about someone, it's someone who is going to be there, not just today and tomorrow, but next year, 2 years, 5 years down the road. Like, we want people who are going to be consistent, and that's part of the personal brand. So just showing up, being who you are. Another way of thinking of it is your personal brand is really a megaphone to who you are. So we can do all the ads, you can do the colors, you can do all the fancy stuff you want. But if it's not a part of who you are at your core, it's not really going to translate. At some point, it's going to be like, the Wizard of Oz, and, that curtain's going to fall down. So it's got to be authentic to who you are. And it's just a megaphone to the rest of the world.
Well, first of all, I feel very flattered. But John, and this is, I think, why we appreciate you so much, John, because education is key for what we do, for what you do, and for everybody out there listening today. So build that personal brand. And if you also want to build some wealth in real estate, consider calling John, all the good bits. So John, anything else that you want to discuss before we head off today?
I would just say this, hey, for some folks, they may not be in a position to invest in some of our deals right now. That's okay. What I would suggest you do is keep learning about this, because there is a strategy for everyone based on your financial situation. It may take a little bit more work. It may have to be more actively involved, whether it's wholesaling deals or working with other investors or things like that. But figure out how real estate can help you, because I'm a firm believer that real estate can help most people achieve their financial future. So it's not the only investment strategy in the world, but I'm pretty bullish on it. So again, even if you're not in a position to invest in deals we do, consider, exploring more ways that real estate might be able to help you.
I got so flummoxed, I couldn't even find my unmute button, John. It's okay. I love it. I love it, John. John, thank you so much for being here today. And guys, if you are looking for some help, if you want to learn the fantastic education, of course, Casmon Capital, he does have the link for a sample deal down here. So if you are looking at what options are out there, take a look at that too. So John, it's been a pleasure as always. And I can't wait to work with you here in 2025. So exciting.
Absolutely. Hey, Shauna, thank you for having me today. Great catching up with you and talking to you. And I hope you have a good one.
You too. We'll see y'all later. Have a great day. Bye.